Welcome back to another episode of With Sonar. I'm Luke Falasca. We're joined, of course, by Tony Muller, and thank you again for joining us on another episode. It's Wednesday, it's 3:30, we're ready to go. Last week we were here during the Global Supply Chain Week, and this week we're back to the normal things. Tony, how you doing?
I'm doing well. How are you?
I'm
you
doing
had a big
great.
Trip, so.
I did have a big trip, so that's right. So for those that maybe watched last time, I was in Florida, Orlando specifically, during the annual Food Shippers Conference. There's 66th annual one, by the way.
Jeez.
Yeah. Pretty good. They've only missed one, I think, and that was in 2021 because of COVID. So, but no, it was very productive. A lot of folks there, a lot of good conversations. I mean, we heard a lot of things. We heard things about electric trucks, the future of where that's going. Things about the future of technology, what some shippers are facing. A lot of CPG shippers there, as you can imagine, right? Talked to a lot of asset-based carriers, some brokers, some folks on the FreightTech side. It was great to have a lot of those people in one place and hear some different things. So very productive.
Good deal.
Electric trucks was kind of fun though. So do you follow electric trucks that much, or just kind of the electric vehicle market at all?
A little. I mean, I pay attention to it. I mean, ear to the wall. But
that's all I do. That's all I do. So they actually had one there from a company. So they brought an electric truck in that's actually moved a lot of freight. And I mean, the biggest hurdle with that right now is cost. Yeah. But it is working really well. It's so quiet. They turn it on, you don't even know that it's on. You don't know that it's on. It's so quiet. But they need like speakers in the vehicle to make it loud so that people know when it's driving by that like there's a car there or a big truck. But anyways, that's not what we're here to talk about today. Tony, you're a stock market guy. What's wrong with my portfolio right now? It's just going down.
It is going down.
How do I change the color from red to green?
I wish I could tell you because I'm suffering the same fate. So,
yeah.
And the freight market's kind of doing the same thing. I mean, when you look at since September?
Yeah.
I mean, we're seeing tender volumes down pretty significantly, right?
Yeah.
I mean, I know you've got a chart here of our outbound tender volume index, but I mean, you look at it, and it's down 11.75% since the Labor Day holiday. So
Look at that.
That's a pretty significant decline.
That's a pretty significant decline.
But I mean, overall, you look at those numbers, and they're still elevated.
They're still up 40%.
Yeah, exactly.
They're still up 40%. I mean, this is the same thing, right? You and I were just talking about this off stage, right? So I'm a big believer in investing, long term. The NASDAQ is typically my choice of market to go into. And it's down almost 20%, not quite almost 20%. But from the highs of 2018, it's still up, 67%?
Something like that,
Something
pretty
like
close.
That. So again, it's one of those things you just invest over time, you'll be fine. This is the same thing. It's like, we're down almost 12%, but we're still up 40% from where we were prior to COVID.
For sure.
But what does this mean? Should we even think about this at all? Should we even notice it? Should we pay attention to this? I mean, that's not nothing.
Yeah, it's definitely not nothing. I mean, it's definitely something to pay attention to. I think the big one, I mean, if you look at rejections with these, I think it's really good because you kind of get an idea of when you think about the OTVI, and it includes both those accepted and rejected tenders, right? Yeah. So you factor in those rejections, you look back at how that's changed. Over the course of the past year, I mean, we're up almost 18% year over year. I mean, that's pretty substantial growth. Yeah. I mean, even in the last month, we're up almost 4%. So we saw this decline in tender volumes, but we've seen a decline in rejections, right? We've gone from that 22, 23% range down to now below 19%, right? And that right around that 19%. So I do think it is something to pay attention to. I mean, we've talked about it, Zach Strickland, Anthony, myself in the morning, FreightWaves Now, that where do we end up? I mean, obviously, don't think that this around 15,000 per level is sustainable in the long term. We're going to find some equilibrium. Where is that? I don't really know. I wish I kind of did. But I mean, we were going to see this kind of decline off of these peaks. I mean, that wasn't sustainable. And we've seen capacity added to the market, and some of that where you see those rejection rates fall brings this index down.
Yeah. What does this mean, if you're, what does this mean for capacity? And when we look at tender rejections, we don't have it on the screen in front of us, but when we look at those two together, what does a declining OTVI or volume mean for the capacity market?
I think, you think about OTVI and being driven with OTRI, right, and that capacity front. So we've seen the capacity loosen. We've seen tenders come down. I mean, a lot of it may be shippers moving stuff forward, pulling goods forward, things like that, building those inventory levels. On the capacity front, I mean, we're adding it, but it's not, the market's not reacting to it as much as it may have in the past, right? We've added, you look at used truck prices are at all-time highs, which tells you the demand is there, right? Yeah. Supply is limited. We're still being limited on the OEM side. Well, guess what? We're seeing still 1 in 5 loads basically being rejected by carriers. It's crazy, especially under contracted.
It is.
Yeah.
No, I think you're absolutely right. It's still incredibly elevated, and it's amazing what people get used to, right? We saw when that September volume hit its high, it was, we're up near like 28% tender rejections, and now that we're at 18%, it's like, oh, okay, yeah, there's capacity everywhere. Well, it's still really tight.
Yeah.
It's still really tight. Something that you and I talked about last week, and I think this is really true, and we've got a great example we're going to look at in a minute, is that when volumes decline or when rejections decline or whatever direction they move in, it doesn't affect all the areas the same, right? Every area is unique. And one market we're going to look at is Indianapolis. Indianapolis is an interesting market because just a few months ago, it was a head haul market. Mm-hmm. It's normally a back haul market. There it is on the screen in front of us. So let's look at this right here. Look at that picture there with those pretty lines. I just want to point out for those viewing, I took that. That's my chart. I made that. So if you need to give anybody credit, that would be me. But more importantly, the blue line here is volume out of Indianapolis. We were just looking at OTVI, which is the overall volume for the national market. This right here is particularly over the last month and a half. This is volume shipping out of Indianapolis. So we came up to that high, but we've seen about a 12% decline, so just in line with the market, maybe a hair over. The green line here is tender rejections, so we get that in contrast with it. What's interesting here is tender rejections are still over 25%, so still very elevated. So out of Indianapolis, traditionally a backhaul market, they have not come down nearly as much.
Yeah, if you even look back, if you were to pull this chart out even further and look back, say November, December, we were actually up. They're increasing, right? So, we were at 22.5% there around Thanksgiving, and now up to 25.5%. Right. You're seeing that capacity tighten in Indianapolis. And you're kind of seeing it. You look across the Midwest, and that's kind of been the trend. Another large market in the Midwest, Columbus, right? Yeah. Kind of same story that you're seeing here in Indianapolis. So definitely an interesting area.
What's interesting to me is when I look at this, you can see the trend. Volume starts to really drop a little bit there, right? So look right at the beginning of February. Volume, green line there for those viewing, shoots right up, right? Then a couple weeks later, blue line, volume, shoots up. I'm saying the same word here. Volume declines, and then tender rejections decline. So they move so closely, and that is a big indicator of where pricing is going to go, right? You've got two softening indicators. You've got blue line, volume decreasing, so less demand, and you have green line, tender rejections or supply decreasing, implying that there's more supply to move that demand.
Yeah, for sure. And I think we have our next chart brings up that market dashboard, right, from Indianapolis to Philadelphia, and I think this is a perfect example, right? You look back at the beginning of, what's this, over 3 months?
Yeah, so 3 months, 90 days.
Look back in December, right, we've seen that increase, right, where we've talked about rejections increasing, right? Now we're starting to see that kind of, I don't want to call it a peak, but we have seen it come off its high, right? So, you're looking at those rejections back on the chart before. We've seen volume come down and rejections come down off their peak.
Yeah.
pricing's come down off its peak.
Pricing's come down off its peak, and this is a great example, right? So we were just a hair over $4.90 a mile in this lane, and now we're a little bit under $4.80 a mile. So it's not a strong decrease yet, but again, volumes and rejections typically lead first, and if those continue to decline, we'll see continued movement downward or downward pressure on these spot rates from Atlanta to Philly, from Indy to Philly. But yeah, this is exactly what we were talking about earlier, right? So we're off our peak. The question is, how far do we fall? Do we go back to where we were 3 months ago? Again, we're still very elevated. We know that. We're very elevated. The question is, how far down do we go? Do we go back where we were 3 months ago? Do we go 6 months back, 12 months? That's the question I think we all want to know.
Yeah, and again, I wish there was a crystal ball that kind of told us that. I mean, it has to do a lot with both the origin and the destination. Yeah. I mean, Philadelphia, you think about where it's located, close to Harrisburg and close to Elizabeth, New Jersey, right? So two really strong markets that are right there surrounding it. So there's that ability to go get loaded. I mean, you may have to deadhead a little, but ultimately that's going to play a factor in pricing too. I mean, you would think, hey, I'm leaving Indianapolis, which right now is a pretty strong market. I mean, when you think about rejections are elevated, so capacity's tight, which is good for pricing. Volumes are still elevated from where they were.
Yeah.
Good for pricing. Going into a market that, hey, I'm going to have to probably deadhead out to a surrounding market. Maybe I don't need to be as expensive because I'm going to get loaded, right? So you kind of get that, you have that, I'm trying to think of how to say it, like you have the kind of some optionality there in that pricing. So you can either price it like I have to deadhead out, or you can price it like, hey, I'm going to get loaded. So that's where I may see, you may see that decline. It's like, okay, as that optionality shows up, hey, we can take a break on pricing this lane because we're going to get revenue generated coming out of another lane.
I think for the camera crew listening, I think we need a counter here for every time Tony drops a 5-syllable word. So he just dropped 2 there. Did you hear that optionality, right? I just had to do a double check. Is that 5 syllables? Anyways, I'm pretty sure it was. We need a little counter there. This is the big vocabulary guy. He's doing it every time, okay? I can't be sitting up here with him, so we need a little counter there. Anyways, no, you're absolutely right, Tony, and spot on there, and I think it'll be really interesting to see where it goes. Also, you said crystal ball. Sonar's kind of a crystal ball. I think we need to change the letter O in Sonar to just like a crystal ball.
It'd be nice.
I think that'll do it. But anyways, Tony, we've got a special guest coming on here, don't we?
We do indeed. So we've got Kyle Jepson, Senior Vice President of Product at Emerge. So Kyle, welcome.
Thanks, John. Thanks for having me today.
Awesome. Kyle, there he is. We're glad to have you here, Kyle. I think I saw some of your cohorts down there in Florida at FSA, right?
Yep, we are definitely out there. So it was a great show, lots of great feedback and good conversations. So fun to be kind of back in the trade show mix again. We'll see how long that lasts.
Absolutely.
Good deal. I mean, I know Emerge being just close some funding, you being in the product side there. Obviously, eyeballs have been on FreightTech. Quick question, does the increased attention on FreightTech continue when supply chains being as thrown out of sorts that they have been over the past 18, 20 months, does that increased attention to FreightTech continue when these supply chain issues normalize?
Yeah, I think it definitely continues to see massive investments in FreightTech overall. Really, this has been kind of a catalyst event that's led and surfaced a lot of the issues that have been here for a long time in the industry. So freight and supply chain has gone from not just a logistics department conversation, but it's a hot topic in the boardroom. And, it's even made it into some dinner table conversations now, which is really, really interesting. For a long time, it's just been underemphasized in the investment community. And I think there's a lot of attention around the opportunity in the market and the total impact that can be made through implementing technology and what we can do.
That's great. Kyle, question here. So we've seen one of the biggest buzz phrases I think we've been hearing over the last 2 years is, what's the new normal, right? Where do we go from here? Where do we land? How high do we go? How far off the peaks do we fall? Things that we've been talking about a lot. So how does the future of supply chain, or how has it been forever changed or impacted by the pandemic?
Yeah, I think the pandemic has brought to light a lot of inefficiencies in our current processes, a major lack of flexibility for logistics departments for the software we use. I think that trend is going to continue to grow and evolve, that things are going to be more dynamic, things are going to need to change faster, and the industry as a whole, as well as the products that we use, is going to evolve with that. So I think that's really the biggest thing that's come out of this is the dynamic nature of the supply chain is going to continue.
And you talk about some of those issues. Would you say are there any particularly glaring issues that have come to light during that time frame as a result of the pandemic?
I think shippers' ability to respond quickly, to change their network, to rebid, tools like Sonar and FreightWaves have given them a lot of insight into what's happening, and we see these trends. But the ability for shippers to react to that is really the missing piece today. So I think you're going to see a lot of evolution in kind of the tools that allow shippers to react to those things more dynamically, whether that's through improved connectivity, changing their supply chain, changing modes, whatever that might be. We're going to continue to see an emphasis on that side of things.
Yeah, I think you bring up a great point there. I mean, about shippers and having to kind of be savvy, right? I mean, shippers largely, the big ones especially, have been savvy, right? They've had the data to back up these changes, and now you've seen this increased investment in FreightTech that's brought kind of everybody more on I don't want to say level playing field, but brought in these smaller players that maybe didn't have the access to data and technology, and now they have that ability.
Tony, you got any numbers for us on like VC investments since the pandemic? I mean, it's a lot into the freight tech world, right?
It is more than I can count. Yeah. I mean, it seemed like, even just this year, you look at some of the deals that have been closed on the VC front in the freight tech space, they've been record numbers. Already. Yeah. The deals in just the first 2 months of the year have been crazy. I guess we've talked about these shifts, right? And how has technology shifted to address these issues, right? We've talked about that flexibility that the shippers need. How has technology evolved over the course of the past, say, few years?
Technology has evolved and the industry is evolving, right? You're seeing a lot more connectivity through APIs. You're seeing a lot more predictive analytics. You're seeing it be a lot easier to create and administer and configure software to support these changing needs. Overall, I think the common theme here is the connectivity between all of the parties in this supply chain is continuing to grow and increase. And I think the companies that are supporting that connectivity and then the companies that are able to act and bring that all together are really going to see a lot of investment here in the near future and continued into the future.
Yeah, I think that's the key, Kyle. We've been talking to a lot of folks here, and the more systems you can have talking together, really helps. Everybody's talking about the same thing. We're on the same playing field. Is there any sense of that? I've heard some frustration from some shippers as well as some logistics providers that they love the technology, they love the connectivity, but there's I think a gap or maybe it's the frustration of are we providing technology for the sake of providing technology, or is it actually solving real problems? Do you think there's a distinction there? Are those things beginning to shake out at all?
That's a common trend in any IT infrastructure or anything you have, right? It's really easy to go acquire software. If you look at just SaaS investments in organizations, it's grown wildly in the last 10, 15 years. The easier it is to procure software, the easier it is to get that aligned in your budget, the more you're going to see people buy tools and not necessarily implement them properly. So I think that's a risk that is real. It needs to be addressed by the companies who are in the spaces, but it's kind of a software as well as just a business process problem that needs to be addressed.
Gotcha. No, I think that's great. And you highlighted risk. Kind of changing gears from risk, what are you most excited about in FreightTech or for FreightTech over the course of, say, the next 12 to 18 months?
Yeah, I would say, overall being in the procurement space, that's what I'm passionate about. I think there's a ton of opportunity and a lot of things are really evolving and changing there. We mentioned the connectivity between systems, the ability to just facilitate a greater level of collaboration across all the parties in that process. And with that connectivity comes the ability for us to help both shippers, carriers, and intermediaries better plan, better execute, and better optimize. That's what gets me really excited about the industry. I think everything that is kind of culminating together is driving that forward.
Awesome. Well, we really appreciate you having you. Feel free. Where can people reach out to you, find you, learn more about Emerge?
Yeah, so anyone can reach out to me at kjepson@emergemarket.com.
Awesome. Well, thank you again, Kyle, for joining us today. Hope to talk to you soon.
Absolutely, Kyle. It's been an absolute pleasure. Thank you. Also, are you part-time landscaper? Your plant game in the background is very strong.
Yeah, that's my wife. So no credit on mine.
Well, it looks good. Thank you, Kyle. Have a good day. All right, man.
Thanks.
Well, that was awesome. I mean,
yeah.
You think about the trends in freight tech. I mean, like you said, the increased investment. I mean, it's awesome to see that changes and what Emerge is doing, right? Bringing seeing their large investment, but what they're bringing to the freight tech environment.
Oh yeah, I mean, I think we haven't really had this many eyes on supply chain really ever. An argument can be made, but I mean, there's so much money, even from you've got some investment firms who have traditionally focused on supply chain or logistics environments or the freight tech world, but you take some of those out, right? Even Dynamo Ventures, right? One of our backers, and they've backed a lot of folks in the logistics and supply chain space for a while. You can go the more traditional route. Goldman Sachs is getting into the games, right? When have they ever cared about what's going on in like logistics or freight tech, right? So it's definitely an exciting time, and I'm excited to see where it goes. And I think folks like Emerge are definitely at the forefront of it. We'll see where it all ends.
I mean, and when you think about it, I mean, we fit right in there, right? Sonar and trying to change that offering that kind of, like you said, crystal ball, or giving that savviness, right? The changing dynamics in the market, and that's where Sonar comes in, right? I mean, the market changes on a daily basis. Bid cycles have shortened, right? And having this access to freight market intelligence kind of gives you that edge that you're looking for.
Yeah.
So I think freight tech as a whole, the eyeballs are there, and I don't think they're going anywhere. I think the supply chain has been changed forever. I mean, you're going to see things normalize, but those tech investments that, hey, they started that 2017, 2018 timeframe, pandemic hit, they got ramped up, right? They're trying to fix the problem that hasn't gone away. So, I mean, I think that's what we're going to see in the future in freight tech. And I mean, like I said, I don't think it's going anywhere. So.
Yeah, I mean, and it really does help with scale. I think that we're going to see a lot more of it. I mean, for those not aware, right? Emerge, I think it was what they did their Series B in September, right? 130 million.
Yep.
Yeah. So great funding round. It's a lot of money, and they are going to have. They want to scale to 15 billion this year. Is their goal as a company. They already did 4 billion in 2021. So. I mean, that's a great deal. They're scaling heavily. They almost remind me of XPO in some ways. Like their ability to scale and build out. That might insult them a little bit, but both are good companies. We like them both. Okay, so there's no favorites here. But their ability to scale and not just that, but it's continue to scale and continue to accelerate growth. I mean, you're a $4 billion company, and if you even like double that to 8 billion, that would be insane. They're trying to go to 15, and that, to me, that's amazing, right? That's when you think about, who sets themselves above the rest. It's the ability to do that and execute on it operationally. So I think that's exciting.
Yeah, and I mean, you look at one of their investors, Tiger Global, right?
Yeah.
They've been high into the global internet, consumer software, things like that. They're getting involved in the supply chain game and the freight tech. So it definitely is. Who is investing is almost as interesting as what companies are taking on these investments. So I think that's definitely a trend to keep your eye out on. It is becoming more of a household conversation. You see the big names, right? Like you said, the Goldman Sachs getting involved. As that continues, guess what? These companies get later stage. They eventually go public at some point. So I think we're still in the early innings there. We've seen some go public of these freight tech companies, but I think it's definitely over the course of the next, say, 5 to 10 years. I mean, you're going to see definitely that explosion of these freight tech companies mature.
Yeah, a lot of that old money that was established, I say old, we're talking about a 2-decade period here, but a lot of that money that was established during, think about it in the Amazon, the Facebook, the Salesforce, Airbnb, Uber phase, right? A lot of those early stage startups that we had from Silicon Valley, right? Throw Google in there, right? Throw, all of those companies, Adobe, right? So much of that money has matured, and that market's become very saturated. It has to go somewhere, and this is a hot spot.
Yeah, I mean, think back to fintech, right?
Yeah.
Right after 2008, the crisis there, that's when a lot of that investment came in. So, I mean,
That's
now
where it
you've
all
got the
comes from.
supply chain, that money's flowing to
Yeah.
FreightTech.
Well, folks, we're out of time. Have a good Wednesday.